Hi. Today I'm going to talk about the differences between working as a quant in a bank and working as a quant in trading and investment firms. There are a number of differences. The differences could be in terms of the work, but also in terms of the work culture, right? There are a lot of similarities, but there are quite a number of differences. I'm going to go through the job descriptions of few of the jobs I came across on LinkedIn, on both actually, on the quant job descriptions at the banks and a few at the trading firms. Okay, so the first one that I'm going to show you is the one that is a quant researcher at Two Sigma, which is a very famous trading and investment firm. So they are hiring a quant researcher in their office in London, and this is the job descriptions. Okay, one thing you will note is that for in job descriptions for in trading firms, the requirements are crystal clear as to what they want in you. But that's not necessarily true in the case of the banks, where it may not be very clear as to what they're looking for in the candidate. Whereas in the case of trading firms, actually, they're very clear, crystal clear as to what they're looking for in the candidate. Okay, so it's easier to understand the job description for the controls in trading firms compared to that in the banks. Okay, so they talk about the roles and responsibilities, and as I've said in many of my videos, that in quant trading firms, they do not expect you to know a lot of finance or the theoretical financial models, quantitative finance models, but they expect it to be really good in programming, mathematics, and some machine learning, right? A lot of the things that they do, you will not find in any course or any book or any blog or any YouTube video. You can certainly learn some of that, the basics, but if they're hiring an experienced guy, they assume that you know already the basics. So they probably won't ask you a lot of finance stuff. So finance is probably a secondary skill if you are being hired at the trading firms. Although some finance knowledge is always helpful, what I have heard from people is that a lot of time they reject some candidates because despite having good programming and ML skills, is because these people have no knowledge of finance. That's not actually expected. You need to have some knowledge of finance, but you will not be grilled in the interview on your knowledge of finance, right? A lot of the quant finance model, the theoretical models, are not very useful. Some of it is useful, but not all of it. Like most of it is not useful actually. Hence you will not be asked questions from that, right? You can see, right, machine learning and artificial intelligence, they're trying out these sort of techniques there, so they want you to know that. They also mentioned about understanding of statistical analysis. As long as you're good with theory, they can teach you everything. So they're not too hell-bent about what you have done in the past. As long as you have some experience and some knowledge of quantitative research, they are willing to give you an opportunity. But let me tell you also that the shortlisting is very, very strict in these firms. They simply don't invite everyone for the interview. So that's the toughest thing perhaps to work in these companies. Look at the qualifications. They need just a bachelor degree, right? This is the difference, the perhaps the biggest difference in the job description of working as a quant in banks to compare to that in trading firms. In banks, they expect you to have at least a master's degree or a PhD. Well, I have seen many bachelor degree holder are also working in bank. It's not an issue, but they prefer someone with a master or a PhD, especially in Europe. But in other parts of the world, this is less important. For instance, in US, it is having a master PhD is less important. Including in India, I don't think people do care much nowadays about having higher studies or masters or PhD. But in quant trading firms everywhere in the world, I think they don't care too much about the qualifications anymore, at least the higher qualifications, such as having a master in financial economics or quantitative finance or PhD in some field. Although what I know is that in some roles they do prefer people with research background, right? Understanding of algorithm data structure is also what they expect you to know. Programming knowledge in Python and all, right? You can also see C++ being mentioned. I have said this in many of my videos that Python and C++ perhaps are the most popular languages in the quant finance world. Other languages could also be used some in areas in some firms, but by far the popular languages are Python and C++ in most places, right? We'll see another job description. So here is another one. Here it is even shorter job description. So you need to know C++, Python again. You need to have some experience with doing analytics on equities. It's very clear, right? It's just 3 sentences about the job description. So it's that specific, right? And again, no mention about knowledge of theoretical quant finance models, right? You certainly can expect some questions, by the way, about the different quant finance models, but they're not too specific about how much you should know about those models. Okay. In contrast to that, let me show you this job description at a bank, actually. Okay. Wells Fargo is a bank in the US, and they're hiring a quant in London. And you see, as expected, the job description, for roles in banks, these job descriptions are always lengthy, sometimes confusing as well. So don't underestimate yourself, or don't reject yourself by saying that, okay, you may not have all these skills, so you should not even apply. That's actually not true, right? In job description, you put a lot of things, and you expect a lot of things in the candidate, and that is certainly true for technical roles and in quant roles, especially in big banks. The job descriptions are written by HR professionals many times, and they may not always know actually what the expectations are from the candidate to write every single technical term in that job description. But that does not mean that you are expected to know every single thing. That is even practically impossible. So they're not very specific many times. So even if you do not have some of the skills mentioned in the job description, you should still go ahead with applying for the job if you're interested. Okay, so a few things I'm going to take you through as to what the differences are. See, here it starts with you should have understanding of some stochastic models. Okay, on different products. FX derivative, here is mentioned FX derivatives, right? Now these models are theoretical quant finance models that you learn in quant finance program, in MSc quantitative finance, or in financial engineering programs, or if you're doing CQF or any other certification, you learn these models. These are theoretical models published by researchers, professors in the academia. These models are used in the industry, not so much in the quant trading world. Actually, there are some uses of it, and in many roles you will be expected to have understanding of them, and in fact people having understanding of them are also quite appreciated, but that's not a prerequisite there. Whereas in banks, you are supposed to know all these things. They're also very particular about understanding of the financial mathematics, understanding of stochastic calculus, as you see here, arbitrage, hedging, understanding of partial differential equations and how you can solve partial differential equations, Monte Carlo simulation, numerical methods. These are typical, things that you learn in a quant finance certification program or in a master's or bachelor program. Goes without saying, they also expect you to be good in programming, but let me tell you that in banks you'll always have a lot of IT people, tech people helping out you with a lot of the things. Many quants working in banks don't do the actual coding. I mean, they may do some mathematical coding, but they may sometimes rely on more quant developers doing that job. Whereas in quant trading firms, that is less of a thing, especially in the smaller shops. You will have to do both. You have to do a lot of coding, but also have to do the actual model development and those activities. So that's another difference you see. Here you see the qualifications, PhD in mathematics, statistics. Again, this is a bit strange, right? They expect someone to be PhD to be able to work on these things. I know many people don't have PhD and they still do fine, but I fail to understand why there is this requirement of a PhD. By the way, it's just for this role. For a number of other roles in banks, in quant area, you will not find this criteria. So don't worry actually if you do not have a PhD, right? As long as you have a quantitative bachelor degree or a master's degree in engineering, science, economics, finance, or management, you should still be able to understand these technical skills and apply for these jobs, right? Again, more description about what you are expected to do after you get selected. Don't take these things very seriously, because after you enter these roles, you will see that the job that you do probably is very different from what you learned about it from the job description. So that simply don't align sometimes, in fact many times. So don't pay too much of attention to, let's say, um, the details about the role. Actually, you can clarify that in the interview itself, asking for the interviewer to clarify about the role. That's much better, because these are the guys who are actually working, right? They did not write the job description, but they are actually working there, so they can explain to you the job or the role in a much better way compared to the HR person who has written this job description, right? That is less of a thing in the quant investing, quant trading area, where in fact in many places they probably don't even have HR people, right? So the manager or the technical person has written the job description, so they're more or less aligned. Whereas in the case of banking, you have a very lengthy job description. A lot of the things are probably irrelevant for the role. Okay. But by and large, it's a quant role, so you need to have good understanding of theoretical models. Programming knowledge is important. Data skills are important. Knowledge of financial markets, some financial products, some asset classes, very important. But also let me tell you that if you do not have experience in that particular asset class or that particular type of model, you can still apply for that, right? It's never the case that you always find candidate having exactly the same experience as you expect them to have. It's not always the case. So if you have similar experience also, you should go ahead in applying. For freshers, actually, they will not expect so many things, but they will expect you to know the theoretical things, right? I spoke about stochastic calculus, and Monte Carlo simulation, partial differential equations, understanding of some of the theoretical models, some understanding of different asset classes, very important there. And then obviously it goes without saying that programming knowledge is very, very crucial in these roles. So the similarity between the two types of quant is that both are highly mathematical role. You need to be a technical person, whereas in the bank it's a bit more academic compared to that in the quant trading, quant investing sort of areas, right? And that's the reason why many engineers actually go into that area, right, in quant trading and quant investment, whereas people from physics, maths, or economics, they prefer, working with the banks. It's also because it's a bit more theoretical compared to, okay, and it's more math heavy also. If you're working as a quant in a bank, it's more mathematics heavy. And a lot of the quant trading is more about common sense. They use very little mathematics, some basic ML techniques, but there's not a lot of use of, let's say, deep learning, for example, or a lot of use of some very complicated mathematics. That's usually not the case. So as long as you're good with coding and you're good with numbers, you can learn some mathematical technique quickly. Then that really helps a lot, right? So that's the reason why they ask a lot of puzzles and brain teasers in the interview if you're being interviewed for a quant role in quant trading firms. Whereas in the case of bank, you will not be asked the puzzles and these sort of things. They may ask you some. I do have the experience also where I was asked these questions, but most of the times you will not be asked puzzles and brain teasers if you are interviewed for a role in a bank. Okay, there they will ask very theoretical questions: econometrics, statistics, financial mathematics, financial markets, risk management, regulations sometimes, and programming. Right, very intense theoretical interview, right, where you have to study a lot before the interview. Whereas in the case of other, in quantitative trading related role, you don't have to study a lot of things actually, because they want intelligent people with interest in finance and skills in programming, right? But obviously there the competition is more, right? So someone who's already got a lot of knowledge of finance and financial models, obviously he will be preferred over somebody who doesn't know these things, especially in a country like India where the competition is a lot more compared to that in the Europe, right? If you're a complete novice, despite being a very good programmer or a mathematician, despite being a finest of the guy in the computer science department in a top university in India, you may not still be preferred, right? So how you build your resume to showcase that you are interested, genuinely interested, is through study, right? You learn a lot of these things. Yeah, even though the job requirement may not ask you for that, but you still showcase that you have learned these things and you have understanding of many of these things, many of these theoretical topics. Okay, there are many other aspects of it also. For example, in the case of the banks, right? Regulations are very important. So writing is very important. You will be writing documents, so they will check your writing skills. They will check your ability to talk to different stakeholders, front office people, risk manager, regulators, auditors, IT people. So stakeholder management skill is super important. Whereas in the case of quant trading, this is a small team of 20 people, 30 people, so there are not many people. You'll probably even directly report to the head of the research team. In some cases, even head of the company, right? Whereas in banks, it's a very hierarchical organization. It's a highly regulated organization. There will be hundreds of people working there. So having good people skills to be able to work in teams, to be able to manage stakeholders is very important. So soft skills are also quite important if you want to work as a quant in banks, right? In terms of salaries, I think it is known to everyone that if you work as a quant in trading firms, obviously you will make a lot more compared to that in banks. But the job in a bank is much more stable in from a many point of view, and it's also good in long term. In Yeah, you could also move to other fields, whereas from quant trading it's not that easy to move to other fields, right? If the salaries are not very different, then I personally believe working for a big bank is better. Whereas if the salary is extremely better, much better in a quant trading firm, I think, yeah, it's then you should prefer that, right? Because you can make quick money, and then after a few years you can change your career or whatever. Okay, if you have further questions, don't hesitate to ask me in the comment section. I wish you happy holidays, guys, and I will see you in another video. Happy Christmas in advance, and enjoy the time, and see you in another video. Thanks, guys.